Here's another slide that shows some of the back-end functionality of the MetaTrader server software. And a couple of things you see in this one, we'll just start from top to bottom. Obviously enabled, the system is enabled, the trading is enabled. The manual only, no automation execution. Again, there's 3 settings for that. The other 2 are deal desk settings. The manual only setting means that the system is always going out and getting an execution. There's no such thing as us setting parameters whereby the trader gets filled, either at the current price or at the current price plus a couple pips. Everything is handled manually and routed out. The spread difference, obviously, there's no, it's set to 0. Maximum deviation, it says 2, but you'll notice it says instant executions only, which are turned off on ours. Fast confirmation on instant execution is unchecked. Okay, so you can see that all of these parameters are basically not used in our system because our spreads aren't set by us. Our execution isn't really handled by us, other than we send out your trades to get executed based on where the buyers and sellers are and who they are at the time your order comes in. We don't have any control to fill you or to set your account to be slipped so much or set your account to not take trades that are so close to the market. Everything is set up to simply route your system or route your orders in the rawest manner possible based on where the buyers and sellers in our quotes are. We have a page or 2 on our site that explain a lot of the differences between our MetaTrader platform and the Deal Desk MetaTrader platforms. You can do that by going to mbtrading.com, going to the platforms part of our website, and then in the submenus you select MetaTrader 4 and Release Notes. There's also an FAQ in that same area. The actual link is right here, and I'll leave it up for a minute for anybody that wants to jot it down, but that's http://www.mbtrading.com/MetaTrader4.aspx # page equals release notes. Alright, so let's move on to the second part of the presentation and talk about order types as we listed in the table of contents. And we're going to start first with what we've already discussed, which is the instant execution. Instant execution is a deal desk function whereby the deal must immediately fill or kill at the currently displayed price for the customer. Without a desk, as I said, we don't have anyone that can respond to a fill or kill and be on the other end of the request. Because of the way that MetaTrader 4 is, without instant execution, there is no way to have a stop loss and or take profit attached to a market entry at the time of the trade. And again, like I said, there was a solid reason for this originally from a logic perspective, but it doesn't really make practical sense 7 years later when the market is moving away from the deal desks and to a true market-oriented where you can place market orders, and you need to be able to attach take profits and stop losses. So hopefully this is something they're going to fix with MetaTrader 5. The next type of order that you'll see in the MetaTrader system is basically market orders. They behave exactly as you would expect them to. The system on our end continues to try to get you a fill until it gets one, trying each price along the way. There is no guaranteed fill, as other orders might take out a participant before your order arrives. Keep in mind that most of the providers in our system are displaying a fairly decent minimum size, and many of them take more than that when they get hit. There's also often more than one bank, obviously, at any given price, and that's intermixed with other customers and funds that are trading on our system on the ECN, which we'll discuss later. So just because you see one price, it doesn't necessarily guarantee 100% that you'll get hit at that price or that you'll get a fill at that price. If the market's moving to the level where there are a lot of customers trying to get executed at that same moment, all of the providers in our system are basically required to take execution. If they don't, if they get to the point where they're not really filling us on enough of our orders, obviously, we drop them out of our system. So they do need to fill, but you have to understand that sometimes there's hundreds, if not more, orders going in trying to buy or sell the pair at the exact same split second, and they're only going to take so much size at any given price before they move themselves up, and those orders are all coming in, like I said, with lightning speed. So the idea that you place an order to buy when everybody else is placing an order to buy and everybody's going to magically get filled, that's not correct. It's not possible in a real market. It doesn't work like that in stocks or futures. It shouldn't work like that in Forex either. And again, our system goes out to 5 decimal places, so a lot of times when one price gets moved, it's the 10th of a pip higher that we go at next. But even if it's not every tenth of a pip, there's usually a lot of liquidity within a pip range, and all of our system will do is wait for your order to get declined, if it does, by one of the banks or pools of liquidity that we're trying to hit. And then when the rejection comes back to us, we route your trade right out to whatever the next best price is along the way. And like I said, sometimes that might even be the same price, just a different participant. And we keep doing that until you get a fill. That's how a market order works. So we don't stop. The system continues to look at what's going on. You're trying to buy, analyzes who's selling at the best price at that split second, sends an order to them to try to get filled. If they get filled, you're done. If it gets back a reject, that means that they've moved their price. They've already been hit by others. We then snapshot again, take a look at who's on the offer, the best offer at that time, and route again. And we'll just keep doing this until you get filled. Limit orders behave exactly as you would expect on the system. Your limit orders, both pending entries and take profits, reside on the ECN and can be seen and hit by other traders and participants. In other words, when you're trying to buy at a certain price, your quote is out there, and if the price of the pair comes to your price, you are the bid or ask until you get hit along with all the other participants. At no time does our system hold your limit order away from the market. And this is a very important point, because on other systems, especially deal desk systems, your limit orders aren't anywhere that anybody can see them. They're held for the desk to execute. So when you're buying, they have your limit order, but they don't fill you until the ask gets to your price as the market's moving down. And when you're selling, they don't fill you until the bid gets to your price as the market's moving up. On our system, if you're buying and the pair is moving down towards your price, you're going to be the bid until either somebody hits you or the entire market crosses over into that pricing range. So you're going to be displayed for everybody to see. And the same is true if it's a take profit, whether it's a take profit or an order to enter a trade. They're both equally considered limits on our system. Everyone can see them, and everyone can hit them when they come down to that price. And in fact, the way our system routes trades, if you're a limit order and you're the best bid or best ask, you'll get hit before we send the trade out to a bank, because it's a faster execution for both parties. It's both your order plus the order hitting you are on our system. We don't have to route anything out. So when you are a limit order and you're the best bid or best ask, you're going to get the fastest execution when somebody comes in from the other side buying or selling at the market. The next order type is a stop order. Stop orders are held on our MetaTrader 4 bridge, waiting for the stop price to hit. They become a market order once triggered. Unlike our desktop and desktop pro accounts, there is no way to add a slippage control on a stop once it triggers with MT4 via the ECN. The reason for this is that MetaTrader doesn't really have those types of parameters except on the deal desk side. They're all server settings about slippage from a deal desk perspective. But in terms of the actual execution piece, there's no setting to allow you to control the slippage. It's a different process, essentially. So all we can do is hold when you have a stop loss or a stop to enter a trade, the bridge will simply monitor the price, wait for it to hit, and then route your order as a market order to get an execution. That's how stops work on the system. This next slide describes something that we've recently changed. This is for when you have a position and you have both a stop loss and a take profit on the position. Here's how the order behaves. If you just have a take profit, the take profit is displayed on the ECN as a limit, okay, and if it's filled, the order is completed. I'm sorry, the take profit piece of the trade is displayed on the ECN as a limit, even if you have both a take profit and a stop loss. So if that gets filled, the order is completed. The bonus about that is that your limit order is thus seen in the quote for other people to hit, so you don't have to wait for the bid or ask to cross to the other side and fill you. If the stop loss hits instead before the take profit price is hit, then the take profit is canceled, the bridge receives an out on that cancel, and then a market order is sent to close the trade at the market. So originally we had both sides being monitored for either price to hit, and then we would sell at the market. In this case, by doing this, your take profit is always going to get filled at the take profit price or better, and will be displayed to the market if it gets up near that area. And it's a big difference, but it makes for better, tighter trading for people. The last order type that we want to discuss here are trailing stops. Now, trailing stops in MetaTrader 4 are held client-side, which means that you need to leave your platform running for them to work. This isn't from our design. Again, we can't control the code or the way that the MetaTrader software that you install on your machine works, and that's how it was designed 7 years ago. It's also not really a true trailing pip-for-pip stop like we use on our desktop systems. It actually, if you put a 10-pip trailing stop, then the price needs to move 10 pips in your favor on the trade, and then the stop becomes break even. And then when it moves another 10 pips, then the stop becomes 10 pips in the money. Our system has trailing stops on our desktop platforms. They are held server side, so you don't need to leave your software running for them to work. They are pip for pip trailing stops. Unfortunately, we can't translate these over to MetaTrader because it just doesn't behave in a manner that would allow that to be accepted into the system.